A few weeks ago, Warren Buffett bought a staggering $772 million of a hidden stock, which brings his total holding to the significant amount of $2.7 billion. That is a lot. And this is all because of a stock market loophole in which he intends to take advantage of. This loophole presents a unique opportunity for us investors, as it gives us the chance to make a significant gain in a very short space of time with minimal associated risk. But what is this simple stock market secret that almost guarantees he'll make a significant profit on the trade? Well, before we look at that, we need to analyze the trades Buffett has made and understand exactly what it means if we also have a chance at making a return using this trick. As we said, Buffett has just bought another $772 million in Sirius XM. And if you're familiar with Berkshire's holdings, you'll notice his previous holding in this stock isn't a significant part of his portfolio. But it actually is, because it's hidden in various different stocks. Looking at Berkshire's previous 13F filing, we can see ownership of Sirius XM Holdings Incorporated at $220 million, Liberty Sirius XM Group C at $1.2 billion, and Liberty Sirius XM Group A at $580 million. Don't worry, we'll explain this in more detail later. And we know all of this information because it's been made available via a Form 4 filing, a statement of changes in beneficial ownership. Now, I'm not going to run through and bore you with the details on why this needs to be submitted, but in summary, it's required whenever there is a material change in holdings of company insiders. For example, if a director is buying or selling shares in the company that they work for, but also shareholders who own more than 10% of the company. If this is the case, they need to submit a Form 4 within 2 days every time that they trade the stock. This, of course, applies to Buffett, who has been buying shares in Liberty Media on and off now for years. But what's critical here is that in March, he purchased a significant amount more than normal. This is evidenced by a total of 8. Yep. 8 Form 4 filings in March alone of purchases in Liberty Media. Now, we're just scratching the surface on this, and this next thing that I'm going to show you is probably one of the most mind-blowing stock market tricks I've ever seen. But before we get onto that, it's critical we understand why we're able to take advantage of this by looking at the company itself. The company itself, of course, is Sirius XM. But sadly, it's not as simple as that. There's essentially 2 companies involved in this trade, Sirius XM and Liberty Media. Liberty Media is a stock Buffett has been buying more of, which is a large media company in the US. And what's really important here is that they have a few different business segments we need to understand. Segment 1, they own 84% of Sirius XM, the other company that we're looking at. Segment 2, the Formula 1 group, Formula 1, MotoGP, and a few others. And segment 3, the live entertainment segment, which includes a small stake in Live Nation and a few others. So in summary, there's many businesses and investments under Liberty Media, which is the key to this stock market trick. Now, normally you just have one stock for the company of Liberty Media, but in this case it says absolutely not. Go f yourself. So instead, there's 3 classes of shares for each business segment: A, B, and C shares. A shares holds 1 vote, B shares hold 10 votes and are all owned by John Malone, and C shares don't get a vote. As we said earlier, Liberty Media owns 84% of the Sirius XM company, and this is through these A, B, and C shares we've mentioned. Now, hopefully this makes Buffett's ownership we looked at earlier a little bit more clear. Remember that according to his latest 13F filings, he owns Sirius XM Holdings Incorporated at $220 million, Liberty Sirius XM Group C at $1.2 billion, and Liberty Sirius XM Group A at $580 million. But what exactly is this simple stock market trick that Warren Buffett is using, and you can too, to ensure a significant profit on the trade? And what is this trade? Well, very simply put, Sirius XM and Sirius XM's tracking stocks of Liberty Media are going to merge and make one single stock. Thank God, because that was confusing as Now, the interesting thing here, and what is enabling this incredible opportunity for us investors, is that different shares available to us have completely different values. The Sirius XM business is currently valued at $14 billion, but the 3 classes of Liberty Media Sirius XM is currently valued at $9.3 billion. And if we calculate this as 100% rather than 84% ownership of the business, it equates to $11.1 billion. As we can see then, there is a clear and significant difference in value, which is really interesting to see because normally when investing, we only have one stock and therefore one price for a business that we're looking into. What this therefore means is that we have a unique opportunity to purchase SiriusXM for around 22% cheaper if bought through Liberty Media's SiriusXM business segment. And the stock market trick to all of this is that the difference in the value between the two will close if the merger goes through. This is what's called a risky arbitrage bet. So very simply put, we buy Liberty Media's SiriusXM shares and hope the merger goes through, seeing a quick increase in value. Now, although all of this sounds great, like any investment, it's not without its risk. First of all, the merger itself might not go through. However, I don't think this is likely to be blocked given the nature of the merger itself. Secondly, the new SiriusXM stock might decline after the merger rather than Liberty Media's SiriusXM increasing. All we know is that the gap in value will close. Although there is one more critical thing we need to consider. If Buffett dumps the stock after the merger, could that drive the price significantly down, leaving us retail investors at a loss? Let me know what you think.